Hey, how you doing? Johnathan Ling here with Modern Life Realty. So to date, I've been a real estate broker working throughout the entire state of Texas for about 15 years. And I specialize in new homes, and I also love to help first-time home buyers that are looking for new homes. One unique feature of my real estate consulting service, other than the great real estate service, is my commission rebate back to my clients. On average, it's about 70 to 90% of the commission I rebate back to my client. Yes, that's right, 70 to 90%. And from what I know, that is one of the largest amounts of rebates that are given by real estate brokers back to their clients. So I encourage you to check me out at www.modernliferealty.com, or you can contact me directly. I'd love to hear from you. And I left my contact information in the video description below. And of course, my contact information is also available on my website. So I'd love to hear from you, and thanks for tuning in, and let's get started. Thanks a lot. Okay, just getting started now. There are, to me, 3 tasks really to building wealth. First one, of course, is to save money so that you can invest it. And a great example would be Modern Life Realty's new home rebate. I just want to reiterate again that my rebate is about 70 to 90% of my realtor commission. It's quite a bit. If you want more information, I definitely encourage you to check it out at my website, www.modernliferealty.com. The second major task I would consider to building wealth would be to build your savings through compound interest. So basically just letting your interest earn interest and not making any type of withdrawals from your savings account to allow the investments to grow and compound. And the third one, which I think is actually one of the more difficult ones, is to save money by lowering your tax liability. And of course today we'll be discussing one way through the sales of real estate. Tax liability, it's probably the most complex of the 3 tasks to building wealth. So definitely I would suggest and highly recommend that you consult with the proper professionals. And of course that leads to my next slide, which is my disclaimer. Okay, back again. So I did want to talk about 2 types of real estate sales for this presentation that are considered by the IRS to help lower your tax liability. We'll be focusing on long-term capital tax gains, meaning that you will have to hold on to these properties for at least 1 year. We'll be talking about your primary residence, your homestead, which is actually governed by the 1997 Tax Relief Act to lower your tax liability. Next, we'll be talking about the sale of investment properties that are governed by Section 1031 of the IRS Code to help your tax liability. Now, interestingly enough, you can actually combine these 2 together. In the very end, I will discuss it. Okay, let's talk about the sale of your personal residence, the homestead, as governed by the Taxpayer Relief Act of 1997. So the Relief Act allows a tax-exempt capital gains of the sales of your personal residence up to $500,000 for married couples and $250,000 for singles. So for example, if you and your wife bought a house for $300,000 and later on sold it for $1 million, that $700,000 profit, you would be eligible for $500,000 to be tax exempt. So in other words, you wouldn't be paying taxes on $500,000 of the profit that you made from the sale of the home. Now, of course, there are some requirements. You have to have owned the home for 5 years, and of those 5 years, you should have lived there for at least 2 years for your personal residence. I believe they have to be consecutive. I'm not 100% sure. Definitely you would have to consult with a CPA or tax lawyer or the recommended professional. Of course, this tax-free capital gain can be performed every 2 years as allowed by the IRS. Before the sale of your home, I would recommend talking to at least a certified public accountant to make sure that you qualify for this tax-exempt capital gain. Okay, moving on to the commercial side of selling real estate, we'll be talking about the like-kind exchange. This is governed by Section 1031 of the IRS Tax Code, which states that you can sell your investment property and purchase a similar investment property and be able to defer partial or full capital gains. Now, this is short-term or long-term, which is a little bit different than the sale of your homestead. This can be performed multiple times a year, whereas the homestead one, you can only do it once every 2 years. And I advise, of course, you should consult with a certified public accountant before considering a like-kind exchange. Okay, now going in a little bit more detail for the requirements for like-kind exchange. Definitely, this is a complex process, so I would recommend consulting with several professionals before your intent to perform a sale and purchase of properties in a like-kind exchange. There are 4 different professionals that I recommend speaking to. Qualified intermediary, they handle your funds and approve the sales. They're actually required to do a 1031 exchange. And I recommend at least talking to a title company that you trust to see if they can recommend a qualified intermediary. Sometimes the title companies themselves have a subsection of their company that does qualified intermediary services. You don't need an experienced real estate professional, but it is recommended to have an experienced real estate professional to help you with the process because it is a time-sensitive sale. So having a real estate professional to advise and speed you up and keep you up to date is, I think, very imperative. And of course, certified public accountant, I would definitely talk to them to make sure that you get the paperwork correct and the timing correct when proceeding with this type of sale. And a lawyer, I think, is very important so they can review the paperwork, look at the clause that's written in all the paperwork, and make sure everything is properly done and legally binding so that when you do this process, there is no type of tax code violation. So I think a real estate attorney would be the one that you would speak to. Now, just talking about the time limits, after you sell your property, you have 45 days to identify a like-kind property to replace the one that you have sold. And then from the sale, you have 180 days or whenever your income taxes return is due to close on the sale. So if your income taxes are due before the 180 days, that would be the controlling time frame. It is a very detailed and time-sensitive process from start to finish. A lot of clause writing and strict IRS tax codes have to be followed. I definitely recommend speaking to at least the 4 professionals mentioned above before proceeding with a like-kind exchange. Also, just a little tidbit, if you are unable to identify or close on a property within the 180 days or identify within the 45 days, you may consider a deferred sales trust. I think a little bit more detail can be gotten from a lawyer, specifically a real estate attorney that specializes in deferred sales trusts. Okay, so I did want to talk about my new home buyer realtor services. I specialize in new home sales only, and because I focus specifically in that small sector of real estate sales, I'm able to give a very large rebate. My new home buyer rebate is the realtor commission plus the realtor bonus minus a $1,000 consulting fee. So at any time you can call, email, or text me if you have any questions, and I'll be more than happy to help you. My realtor commission varies, but typically it's 3%. I've seen as high as actually 5%. And realtor bonus, though it's not always given, that's yours as well, and those are all over the place. It goes from $500 to up to $15,000. But either way, that money is yours. I only collect the $1,000 realtor consulting fee. Something you should keep in mind, though, is my rebate does reduce the cost basis of your new home. So when you do sell it and you are considering the tax exemptions, you will have to consider my rebate into the calculation of your capital gains. Just for example, if you purchased a home for $300,000 with a 3% realtor commission and a $1,000 realtor bonus, my rebate back to you will be $9,000. So when you do sell the home, instead of calculating the final sales price, subtracting $300,000, you will be actually subtracting $291,000 because that would be the adjusted sales price of the home, including my rebate. So for our first example, we'll be focusing on the sale of your homestead as governed by the 1997 Tax Relief Act. So let's say you are single and you purchase a home for $100,000. You rent out the home immediately for 4 years. Then you move into the home after renting it out for 4 years and you decide to live there for 1 year as your homestead. Now you decide you're going to sell the home after living there for 1 year, and you're able to sell it for $350,000 after 5 years of ownership. So let's go ahead and stop here and go over quickly how the 1997 Tax Relief Act applies to this example. So you are single, so you are exempt for a long-term capital gains of $250,000. So you don't have to pay taxes for $250,000 in long-term capital gains. Now, if you look at point 3, you've only lived there for 1 year. Even though you've owned the home for 5 years, you haven't fully satisfied the 100% tax relief for long-term capital gains because you've only lived there for 1 of the 2 required years. Luckily, the Tax Relief Act still allows you to exempt half of the $250,000 because you lived there for 1 year. So instead of $250,000, you are actually exempt for $125,000. So you sell the home for $350,000. That is a long-term capital gains of $250,000. Of that $250,000, as discussed, you are allowed to exempt half of that long-term capital gains. And let's just say your long-term capital gains tax is 15%. So you're able to save $18,750. But you are still liable for the other half, the $125,000 in capital gains. So you do have to pay the 15% tax rate for that amount, which comes out to $18,750. If you had lived there for 2 years after renting it out for 4, you would be eligible to exempt $250,000 in capital gains. So you wouldn't have had to pay that last amount, that $18,750. You could have saved that in addition to the other $18,750. So how does Modern Life Realty help? Well, in step 1, if you decide to purchase a home and you decide to purchase a new home, well, I can definitely help you there with our Modern Life Realty rebate and consulting service. So the second example for the sale of your homestead, let's just say you purchase a home, again, $100,000. This time you live in the home for 2 years, then you rent out for 3 years. Then you decide to sell it for $300,000. So that would be a $200,000 profit. For this example, instead of having to prorate the capital gain, you would be able to claim 100% of the capital gains for tax exemption. So the entire $200,000 is exempt from taxes. So that would save you, if you were in the 15% tax bracket, $30,000 in tax saved. So again, why 100%? Well, it's because you did fulfill the entire 100% requirement for the 1997 Tax Relief Act. So you lived there for at least 2 years out of the last 5. So once again, how can Modern Life Realty help? Well, if you're buying a home for $100,000 and it happens to be a new home, that's where I can help you with my great rebate program and excellent real estate consulting service. In example 3, we'll be talking about a like-kind exchange. So this would be the sale of something that is not your homestead. So let's just say you purchase an investment property or properties for $250,000 total. Decide you're going to sell these property or properties 3 years later for $400,000, and you now have a capital gain of $150,000. I believe you can actually sell it in less than 1 year, and you'd still be able to take advantage of a like-kind exchange. So you go ahead and you perform a like-kind exchange with these properties that you sold 3 years later by purchasing 2 houses for $400,000, which you plan to rent out. Now remember, before performing a like-kind exchange, I highly advise you talk with all of the professionals involved, so maybe a realtor, a definite qualified intermediary, and a real estate lawyer, and your accountant, to make sure it's done properly. So, completing the transaction, you have deferred your taxes, $150,000 in capital gain. So in the 15% tax bracket, that would be $22,500 that you've deferred, meaning that you would still have to pay these taxes if you ever cash out the capital gain. So unlike the previous examples where you are selling your homestead, you aren't exempting yourself from the taxes, you're actually just deferring them. But in the next example, we will discuss a method to be able to change the deferral to an exemption. So, how can Modern Life Realty help? Well, if anytime you're buying a new home, I could definitely help you with the rebates and of course my excellent customer service. Note the one thing though is most new homes, you would have to buy an inventory home, not necessarily a home that's being built, because it will most likely go over the 180 days. Now of course, just remember that there's also a deferred sales trust, so you might take advantage of that. Okay, so the last example, we will be combining the like-kind exchange with the 1997 Tax Relief Act. So we will be converting deferred taxes to exempt taxes. So let's just say a married couple purchased their rental home number 1 for $250,000, and later on, 3 years later, they decide to sell it for $400,000. And before they sell it for $400,000, they notified a realtor and a qualified intermediary to perform a like-kind exchange. Now remember, this is very important. that you take care of all the paperwork or like-kind exchange prior to selling your property. So now they purchase home number 2 for $400,000 and rent out. So it is a complete like-kind exchange, 100% deferral of the taxes. So the capital gain of $150,000 was tax deferred. After 2 years, you sell rental home number 2 for $500,000 using a like-kind exchange again, and you sell home rental number 3 for $500,000. Now your total capital gain that is being deferred is $250,000. And this is because you have deferred the combined profit of the sale of rental home number 1 and number 2. So now you rent out home number 3 for 3 years, and then you decide to move in it for 2 years. So now you are converting it from a rental property into your homestead. And of course, you should definitely consult with a CPA and any other professionals for the IRS requirements to satisfy the conversion of an investment property to a primary residence. Something you may need to do is to pay the taxes now from the depreciation schedule for your investment properties. So now you sell home number 3 after living there for 2 years and owning it for 5 to purchase retirement home for $250,000, which happens to be the same price as home rental number 1. And of course, I did this on purpose just to make it easy. So that your total capital gain from home number 1 all the way to retirement home is $350,000. That would be your combined profit over the span of 10 years. And because now you have converted all of these rental homes into a final homestead, you actually are allowed tax exemption for the entire $350,000. So you pay no taxes on this $350,000. And that is quite a bit of money that you're saving through the 1997 Tax Relief Act. So how can Modern Life Realty help? Well, during this process, at any time you're deciding to buy a new home, definitely Modern Life Realty is there to help you purchase the new home, as well as consulting you with the purchase of your new home. Well, that concludes today's presentation on selling real estate tax-free. I hope it was helpful to you guys, and if you have any questions regarding my new home sales consulting services, or you're ready to purchase a new home, I'd be more than happy to help you out. Please feel free to call, email me, or text me, or FaceTime me anytime. I'd love to hear from you. Thanks again, and have a great day.